Well, we mentioned those U.S. job figures. Let's take a deeper dive into them now. Joining us from Washington is market analyst Ebong Eka. But first, let's go to our reporter here, Asher Westropp-Evans. And Asher, what are those figures?
All right, so the immediate figures that stand out here are the job creation in the last month. So we saw 164,000 jobs added to the U.S. job market within the last month, which notably is the fewest number for the last 6 months of jobs reports. Furthermore, but despite that fact, we see 3.9% rate of unemployment. Now, that is some staggeringly low unemployment, the lowest in 17.5 years, which occurs primarily thanks to a large number of people, in fact, leaving the U.S. jobs market.
And Ebong, over to you in Washington. Let's take a deeper look at this jobs report and see, under these supposedly encouraging numbers, could there still be underlying issues? We know that the African-American community and unemployment there has been much higher than among whites and Caucasians. Is that still a problem?
It is still a problem. It's been a problem for the last several decades, as a matter of fact. One of the other issues that you're seeing with the unemployment rate, despite it being extremely encouraging, is that wages have been stagnant for the most part. And so you're seeing some of the drop in the unemployment rate, not only because there are more jobs, as you noticed, we had a little shortfall of what was expected, but you're also seeing people voluntarily drop out of the job market to potentially go into entrepreneurship.
I want to hone in on that number of the disappointing number or slightly lower numbers in job creation, because one of the key claims of the Republican or the Trump tax cut for corporations would be that they would be reinvesting that money into expansion. Are we really seeing that, looking at some of these numbers?
It's a little too soon to make that distinction. We're going to need another 12 months or so in order to see the actual effect of the tax cuts. But you saw earlier on, once the tax cuts were announced, a lot of major companies were providing bonuses to their employees, and then these employees, theoretically, through trickle-down, were supposed to actually spend the money or consume other goods and services to help prop up other businesses. But you're going to see that happening over the next 12 to 24 months. I would intimate with regards to the tax cuts and how it affects the economy at large.
Okay, Bob, stay with us because we want to look at a story which really has now international ramifications, and that are these trade talks that have been going on the last couple of days in Beijing. U.S. sending over there Steve Mnuchin, the Treasury Secretary, and Wilbur Ross, the Commerce Secretary, to try to hash out a number of issues with the Chinese. And Asher, we have some reports today indicating what it is that the U.S. is looking for in those talks.
That's right, Kalev. Beijing was handed this sort of note of details for what lines the U.S. was looking for going into the negotiations. And we can take a look now at some of the details of that note. So the U.S. is looking for China to cut the trade imbalance by $100 billion a year, to halt Chinese government support for advanced technologies, something the Chinese government is looking to prop up with that Made in China 2025 initiative, to cut tariffs on all products in non-critical sectors to levels no higher than the U.S., and to withdraw challenges that China currently has out against the U.S. at the WTO. Now, China has come out sort of with their own remarks against this. They're keeping a bit mum on the specifics of the details, but the Foreign Affairs Department had this to say coming out during the talks. Let's take a listen.
All right, well, we'll hear that side.
Unilateralism and trade protectionism are no different from building a self-isolating siege, which do not conform to the market law and international rules. Eventually, they are bound to be detrimental to others while ruining the U.S. itself.
Ebong, I want to look at that list, that, let's say, wish list of the Trump administration, especially cutting the trade deficit by $100 billion. How realistic is that to ask that of the Chinese?
Well, to be honest with you, I don't think it's extremely realistic. Here's the biggest thing that the Trump administration and the U.S. government really cares about. It's intellectual property, IP. So Asher had recently mentioned that the U.S. wants to ask China to stop subsidizing payments through advanced technologies. You're seeing a lot of problems with intellectual properties, and we have intellectual property theft as well as lawsuits for the last 20, 30 years. But one of the conditions that China has for growing its economy to 2020 or 2025, I think it's made in China policy, is to require foreign governments or foreign companies who do business with Chinese companies to hand over their IP and their best practices for the particular products and services. That is literally a recipe for disaster.